Hi, this is Jim Sackman, your Focal Point Business Coach, and this is another of our Success Friday videos. And we're talking about annual plans, and I want to talk about two key metrics, especially around our initiatives, but in the business in general. The first type are called Key Result Indicators, or KRIs. They're a measure of the results of business activity. For example, revenue. And revenue is a result of sales, of course, which is a primary business function for any company. And the thing is you need to be able to measure your KRIs, and most of them you will find are financial and are backward looking. So the things all you did, the last thing you do is collect the check, right? So that's why it's a result and comes after the fact. But when we talk about initiatives in the business, then you need to be saying, is this initiative important? Will it become in a separate part of the metric, or how will you keep track of it separately? The second thing is KPIs, or key performance indicators. Now, these are intended to be leading looking metrics, so something that looks into the future. So, in sales, it might be the number of sales calls that you make, because percent of them will become revenue. So you can look at this and then decide what those key performance indicators, what business activity that you do on a day-to-day basis drives the results you want. And if you can make that correlation, then you've got something where you can make your business relatively deterministic. By executing against your KPIs, then you can create the KRIs that you want. So again, KRIs are in the past, KPIs in the future, and that's really the goal here is, how you do this. Now, let me give you an example of, and not a KPI from my past, but how it relates to a KRI and something that's backward looking and how it can be forward looking. When I worked at AFC, we brought a group in Dallas that was doing business with Bell South, and they could show that housing starts led to revenue 6 months after a change in housing starts. They would see the equivalent change in revenue. The good news is, of course, that's easy to track. The bad news is, of course, you can't impact housing starts, right? That's not a level of control you've got. So it's an interesting tool, but not one that was something that's a KPI. One of the things that is a KPI was cost reduction that we did at AFC. We'd stack rank products by volume and took the top 10 and looked at what we could do to reduce the cost. We set a dollar amount from each one that would need to be saved on an annual basis and measured it quarterly. And so our cost reduction work drove actual results. And that's how KPIs work. That's the difference between KPI and just something that's out there, and what KRIs are all about. So this is Jim Sackman from Focal Point. Change your business, change your life, and have a great day.